everybody. Welcome to Liberty Call. Today is, what day is this? Wednesday, July 3rd, 2024. Hope you're having a fantastical day out there. I know tomorrow's the 4th. I just couldn't remember what day of the week it was. So anyways, hope you're having a good day out there. You can see I trimmed up the beard of knowledge here. So I'm not quite as smart today because I cut off about an inch or so of my brain power. So I might be a little slow for the next couple of weeks until it starts to puff back out. So anyways, hope you're having a good day. It is a beautiful day here in Colorado. A little warm, but we'll take it. There's very few clouds in the sky, so I hope it's beautiful wherever you are at today. So if it is your first time watching Liberty Call, if yes, you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right, let's go ahead and get into today's numbers. It was a half day of the market, closed at, I think, noon, 1, somewhere around there. I just know that my chart stopped moving earlier today, so I was like, oh, I guess the market's closed. All right, Dow Jones was down 0.06%, 23 points, closed at 39,308. S&P 500 up 0.51%, 28 points, closed at 55,37. NASDAQ up 0.88%, 159 points, closed at 18,188. The VIX was up 0.5% today. It's at 1209. Canada up 1.23%, Brazil up 0.77%, and Mexico up 1.63%. In Europe, Germany was up 1.19%, the UK up 0.61%, France up 1.24%, the Netherlands up 0.7%, Spain up 1.32%, Italy up 1.09%, Switzerland up 0.15%, and Portugal up 1.14%. So pretty good day for Western Europe, a lot of 1%, so that's a positive sign there. Russian exchanges both red today, the MOX down 0.54% and the RTSI down 0.49%. And the Asian markets, the Nikkei in Japan was up 1.25%, Australia up 0.28%, New Zealand up 0.29%. In China, the Shanghai was down 0.49%, the Shenzhen component down 0.59%, China A50 down 0.21%, DJ Shanghai down 0.37%, Hang Seng up 1.28%, and same with the Taiwan weighted. All right. Awesome stuff, huh? I know. Very, very exciting. All right, let's get over to the market recap. S&P 500 in record close as weaker data stoke rate cut bets. So everybody's thinking that the data coming out right now is going to leads them to believe that the Fed's going to cut rates sooner than later. I don't think so. I mean, it could happen sooner than later, but we're going to need some sort of a negative catalyst, down market, some sort of a black swan event, something like that is, in my opinion, is what is going to lead to the Fed lowering rates. I don't think it's just going to be because they feel like it. All right, on Wednesday, the S&P 500 achieved another record close in a holiday-shortened session driven by weaker economic data that bolstered hopes for sooner interest rate cuts. This trading day preceded the Independence Day holiday and followed strong gains on Tuesday, partly fueled by Federal Reserve Chair Jerome Powell's comments on progress in cooling inflation. Again, I really don't see it a whole lot. I mean, he seems to claim that inflation is cooling. Yeah, I mean, it's slowing down. It hasn't gone. We have not had any deflation. Deflation is what we want, even though the Fed absolutely doesn't. Key economic data released on Wednesday showed U.S. factory orders unexpectedly fell and U.S. services activity dipped into contraction, signaling a slowing economy. These indicators strengthened market expectations for earlier rate cuts. The ADP National Employment Report also revealed that private payrolls grew by 150,000 jobs in June, down from the revised 157,000 in May, aligning with the trend of a decelerating labor market. Market sentiment reflecting these developments, with the probability of a rate cut in September rising to 68% from 58% the previous week. Investors are eagerly awaiting the minutes from the Fed's June meeting, scheduled for release later in the session, to gain more insight into the central bank's views on monetary policy and inflation risks. We might go through that on Friday, just depending upon how much news is between now and then. Might do a long breakdown of the Fed minutes. They're usually pretty dry, so I usually save it for a day when there's not a whole lot to talk about. In corporate news, Paramount Global stock surged over 11%, following reports of preliminary data for Sherry Redstone's National Amusements to sell a controlling stake in the movie studio to David Ellison's Skydance Media. Conversely, Constellation Brands saw its stock fall by more than 3% after its first quarter sales missed estimates, although Truett Securities noted that the results were largely anticipated as consensus estimates had been lower throughout the quarter. Energy stocks benefited from rising oil prices after the Energy Information Agency reported a substantial draw in U.S. crude inventories, which fell by 12.2 million barrels in the week ending June 28th, far exceeding the expected 400,000 barrel draw. Companies like Kinder Morgan, Williams Companies, and Schlumberger saw their stocks rise over 1%. On the political front, speculation emerged that President Joe Biden might consider dropping out of the presidential race amid concerns about his candidacy following a lackluster debate performance. Well, that is a nice way to say it. I thought he was dead up there on the screen or up on the stage. VP Kamala Harris is viewed as the likely alternative should Biden withdraw. I think it would be racist not to put her in the number one seat. Any Democrats who want to go with, Newsom in California or Whitmer in Michigan, I think they're just being racist and don't want to have a black person as president. So, especially a black woman. Overall, the day's trading was influenced by a mix of economic data, corporate developments, and political speculation, with the market largely optimistic about potential rate cuts despite the backdrop of weaker economic indicators. All right, so let's get into some of that data that came out today. May international trade, the trade deficit. This was put together by Strider Elast, senior economist at First Trust. All right, in May, the U.S. trade deficit in goods and services expanded to $75.1 billion as exports decreased more than imports. However, the focus is on total trade volume, imports plus exports, which declined by $3 billion in May, but is up 5.4% from a year ago, with exports increasing by 4.3% and imports by 6.2%. A significant shift is occurring in U.S. trade patterns. Imports from China fell by 2.5% in the first 5 months of 2024 compared to the same period in 2023, and by 26.3% compared to 2022. Mexico has now overtaken China as the top exporter to the U.S., with Canada in second place and China in third. Global supply chain pressures have eased significantly, as evidenced by the New York Fed's Global Supply Chain Pressure Index, which was at negative 0.48, standard deviations below the historical average in May, compared to 2.7 standard deviations above average 2 years ago. There is potential for temporary volatility due to Yemen's Houthi rebels disrupting container ship transit through the Red Sea and the Bab el-Mandeb Strait. Notably, U.S. petroleum exports exceeded imports for the 24th consecutive month, maintaining the U.S. as a net exporter of petroleum products. In labor market news, initial unemployment claims rose by 4,000 to 238,000, and continuing claims increased by 26,000 to 1.858 million. ADP's measure of private payrolls grew by 150,000 in June, below the expected 165,000 estimate. This data helps finalize the forecast for June's official non-farm payroll report at 194,000, with expectations of further slowing payroll growth in the coming months. Additionally, sales of cars and light trucks were at 15.3 million annual rate in June, down 4% from May and 4.8% lower than a year ago. A rebound in sales is expected in July as dealerships address issues related to cyber attacks. All right, so that's that. Let's get into some more data. The June ISM Non-Manufacturing Index. Now, this is some exciting news, I tell you. Exciting stuff. The ISM Services Index for June fell sharply to its lowest level in over 4 years, marking the lowest point outside of the COVID lockdown months since July of 2009. This decline indicates that the U.S. service sector, a crucial part of the economy, has contracted in 2 of the last 3 months, suggesting a slowdown in economic momentum. The detailed report shows that of the 18 major service industries, 8 reported growth, an equal number reported contraction, and 2 showed no change. The overall index drop was driven by significant reductions in business activity and new orders, both of which fell into contraction territory for the first time since December of 22 and May 2020, respectively. The employment index also declined further into contraction territory, falling to 46.1, marking the sixth time in the last 7 months that it has been below 50, indicating subdued hiring in the service sector. Despite this, the price index, while lower than the highs of 2021 and 2022, remained elevated at 56.3, showing that prices in the services sector continue to rise, keeping inflation a major issue. Most survey comments highlighted ongoing inflation pressures rather than slowing activity or orders. The persistent inflation in the service sector has been a significant contributor to the overall high inflation rates this year, complicating the Federal Reserve's efforts to manage economic stability. Well, they've done a fantastic job, if you ask me. The service sector, that's sarcasm, folks, if you're not picking up on that. The service sector, which has been a critical support for the U.S. economy in recent years, has shown signs of strain. The Federal Reserve's response to these developments in the coming months will be crucial in determining whether the U.S. might face stagflation similar to the 1970s. Woo, that'll be fun. Characterized by high inflation and stagnant economic growth. Well, the Fed has no one to blame but themselves. They created this problem by printing all that money. They and those in Washington, D.C. Well, they're all in Washington, D.C., but those in the government and those in the Fed are the ones who created this gigantic inflationary mess, just so they could save their friends on Wall Street and, big business. All righty. Got one last article here. It comes from Zero Hedge, and it's titled, "How Much Are State and Local Government Workers Overpaid?" I'd say by a lot, quite honestly. And looking at this chart here, it's a pretty obscene number. All right. Mike Shedlock, in an article on mishtalk.com, discusses the latest Bureau of Labor Statistics report on employer costs with a specific focus on costs associated with teachers. According to the BLS report, the average hourly wage for government employees, including benefits, is $61.27 per hour. That is obscene, compared to $43.78 for private sector employees. Let me stop here. People who work for the government should not make more than their private sector colleagues, in real business, because public sector business is completely fake. Most of it is just made up jobs, pushing paper around, and just busy work. So the fact that these people, on average make the same hourly wage, plus then expect a pension on top of that when they retire, you know what? Go to hell. I mean, personally, I'd fire the entire federal government today. No, you don't get any pensions. All that money in your pension, it's gone. Bye-bye. We're going to use that to pay off the debt. Sorry. Oh, all right. So government wages alone are average $37.90 per hour, which is 23.2% higher than private sector wages at $30.76 per hour. The real disparity, however, lies in benefits, with government employees' total compensation being 39.9% higher than that of private sector employees. And if we come over here to this chart or this graph, let me zoom in a little bit, and you can see here, this red line is the total government compensation. The green line is government compensation or government wages. The yellow line is private compensation, total compensation, and then the blue line is just private wages. So you can see, starting down here at like 2004. Private wages averaged $16.64 an hour. Government employees' wages were $23.69 an hour, and then with all their benefits, totaled up to $34.21 an hour. So the gap between regular wages of $16.64 and the $23.29 of total compensation for private employees, that's what, a $7 gap. And then from 23, that's an $11 gap between the public workers and their total compensation. So yeah, it's unreal. So, all right, let me get back to my notes here. Focusing on teachers, the report shows that they earn $37.90 per hour in direct wages, but a total of $79.38 per hour when benefits are included. This means that benefits for teachers amount to 109% of their wages. In context of economic fairness, President Biden has called for teacher pay raises and expanded access to pre-kindergarten in his State of the Union address, although he did not provide specifics on funding these initiatives. Yeah, they never do. In Chicago, the teachers union is seeking $50 billion despite the city facing a $700 million deficit. Chicago already spends $29,000 per student, and Chicago public schools face significant budget shortfalls for the next 2 years. Here in I looked this up earlier before I started the broadcast, like Douglas County, Colorado, a teacher with just a bachelor's degree, which I don't have, so I couldn't get a job there, makes I think 51 or 55,000, and then I think the max salary at 17 years was like 66,000. So pretty decent, and I think we spend about $13,000 or $14,000 per head in the district. So certainly not the worst like Chicago or New York, and more in line, I'd say, with what was spent per head in the school district where I lived in Houston, in the suburbs. So, all right. Shedlock argues that the only solution to this unsustainable financial behavior is to eliminate public unions entirely, a stance even supported by former President Franklin D. Roosevelt. He criticizes Chicago's political leadership, particularly Mayor Brandon Johnson, a former teacher who's a moron, for exacerbating fiscal irresponsibility and not addressing crime effectively. Shedlock points out that there is less than a 50% chance of police showing up if a person is shot in Chicago. Good reason not to go to Chicago. Highlighting the city's severe issues with public safety and governance. In conclusion, Shedlock suggests that due to deeply entrenched problems with public unions and governance in states like Illinois and California, the most sensible action for residents is to leave those states. So I'd agree with that too. So, all right. Well, that's everything that I had for today. We have a holiday tomorrow, so there'll be no broadcast, and we'll be back to work on Friday. Probably be a pretty light day. I imagine most people aren't going to be working too hard. I'll be here at my desk in case there's any fires I need to put out for people, and catching up on summary letters and things like that, the stuff that's just boring and not exciting at all. So hope everyone has a good holiday. Hope you keep all your fingers and don't blow them off with any fireworks. I didn't buy any. I don't think they're allowed here where I live, but I'm not totally sure. I don't mess with them just because, I'm the kind of person who hurts themselves all the time. I'm always like, I got scars on my face and my arms, and I'm just the guy who falls down or, cuts himself. So I don't need to have explosives around. I like having all my fingers. So, all right. Well, hope everyone has a good holiday. And if anyone needs anything from me in the meantime, you can go to DSAFinancialGroup.com. All my contact information is there. So if you need to get your financial crap together, give me a buzz. I'd be happy to help you. So, like I said, hope everybody has a good evening and a good holiday tomorrow. And I'll talk to you on Friday. Adios.